Good afternoon. Welcome to PBA at Noon. I'm Paul Benwell, and I'm joined by my colleague, Sophie Caesar. Today, we have with us newly listed Tribe Property Technologies, listed on the TSX Venture with the symbol TRBE. Tribe is a property technology company that is disrupting the traditional property management industry as a rapidly growing tech-forward property management company. Tribe's integrated service technology delivery model serves the needs of a much wider variety of stakeholders than traditional service providers. Tribe seeks to acquire highly accretive targets in the fragmented North American property management industry and transform these businesses through streamlining and digitizing operations. Tribe's platform decreases customer acquisition costs, increases retention, and allows for the addition of value-added products and services through the platform. Here to explain all of this to you today is the CEO, Joseph. Is it Nakla, Joseph?
You nailed it, Paul.
All right, and CFO, is it Jim Defer or Defer, Jim?
Oh, Defer, thank you.
Defer?
Yeah.
There you go. So as always, please ask your questions at the end, during the Q&A, put them in the Q&A, and we'll ask them at the end. So gentlemen, start whenever you're ready. Thank you.
Thank you, Paul. Thanks, Sophie. It's so nice to be with all of you. My name is Joseph Nakla. I'm the founder and CEO of Tribe Technologies. We are a prop tech company. We went out to solve a really interesting problem, very specific to how cities are changing. As we all have seen across the country and the rest of the world, there's more and more of what we call vertical villages, these big buildings that keep arising all over these cities. And believe it or not, there's quite a bit of complexities associated with how these buildings are operating from a technology point of view, from the way they're built, and from the operating systems and the solutions that they need to be operating efficiently. Historically, I'm a civil and structural engineer by trade, absolute passion for technology. I was fortunate enough for 17 years to be involved in a company called TO Networks. Took it public when we were very, very young, and we grew it to sell it to PayPal out of the TSX a few years ago. And I focused my next challenge on something that was very close to my heart, which is really creating good solutions for those that are living in residential homes with common interests or common walls, i.e. big buildings, as you've seen. I'll pause here and let Jim introduce himself, and I'll take you on our deck.
I'm Jim. I'm the CFO of Tribe. I joined a couple of months back to help the company get listed on the Venture Exchange. My background is a combination of investment banking and working with early stage TSE or TSX Venture listed companies as they acquire and grow and get onto better things and bigger things.
Great. I will go ahead and share my screen. So what we are here to tell you about is obviously the company called the company Tribe, and our solutions that are all interwoven technologies, apps, as well as services, whereby we actually are one-stop shop to support a full community. Any big community, small community that you come across the country qualifies for our sophisticated solutions. We are the 6th largest property management company in the rental management sector, as well as happen to be the 6th, we think the 5th largest in the condo. And the difference obviously in the rental sector is institutional rental, is big REITs owning big buildings or big apartment buildings that require management. And in the case of condo corporations, these are individual communities that have number of owners, and those owners coming together with a board and actually hire a company like us to come out and actually take care of their affairs moving forward. We've grown our business, we've built our technology and put it into a significant number of communities to support traditional property management companies over the years. We found out quickly what was challenging in the industry. We asked ourselves in 2018, can we go out and do it ourselves? Can we fully deliver a full solution for these communities? Can a condo corp or a big REIT come to us and say, hey, we need you to take care of all the affairs using all your excuse me, all your technology as well as all your services. So we actually got licensed and we actually went to the market to compete with traditional property management companies. And the results, as you can see, is the fastest growing property management company in the country, managing almost 40,000 homes, representing more than 100,000 people in the great country of ours. We asked ourselves on the journey, can we actually start acquiring traditional property management companies and put them into our solutions that are better gross margin and much more accretive as it pertains to our operating model? And the quick answer was yes. We started to make further acquisitions of traditional property management companies, and we're still continuously doing that. That's one of the main reasons why we went public. But in addition to that, we also started to acquire some interesting technologies, smart building technologies, rental solutions that can actually enhance the services that we offer in the buildings that we are in or the new buildings that we're acquiring. So we are a unique player in that there are a lot of property management companies. However, none of them are technology backed and they build their own software the way we do. We lead with this technology. The biggest difference between us and a traditional property management company is that our application, our technology is digitally installed in every single home. And we have a lot of significant data that we have about the home payer, who lives there, pets, no pets, square footage, so on and so forth, because we're really, through our application, have the ability to aggregate solutions and offers to these homeowners that are in our network. We have a track record. We've made a lot of acquisitions in historical businesses before, and obviously we've done 5 years in the space. We have a very strong financial. In 2018, we first went to the market with our solution. We did less than $3 million of recurring revenue. We anticipate this year that we will do $16 million in recurring revenue. Very sticky business, very low churn, and a decent gross margin. And we're obviously servicing a tremendously big market, as you probably will have seen in the last 15, 20 years, the change in the landscape in the country, both on the rental side and on the condo side. So that market is asking more and more for services like ours to come in and help them navigate through the management needs. And then we have a great management team. I'll speak a little bit more about that, but both on the real estate and management side in the property management space, as well as scaling up businesses, both on the software and the SaaS businesses, with quite a bit of M&A expertise. It's a big industry, and there's a lot of data here. The most important, perhaps, number that might surprise you is the $90 billion exchanging hands annually within the industry, between the property management companies, service providers, and these communities. That's a number in Canada and the US alone. The problem in the industry, if you've ever lived in one of those buildings, you'll be very familiar with these. Lack of communication, very paper-based, lack of history. New condo corp comes in, they don't know what happened 5 years ago. There's projects that are still under warranty and or require work. You live in one of those units, you want to move in, move out. You don't know who to talk to. You need very paper-based, send checks, receive checks, complaints, bylaws. Can I buy a barbecue? Can I not? Can I sell my unit? What paperwork do I need? So all that stuff, inclusive of even things associated with how the building operates, fall under our technology and our solutions that we offer. One of the interesting ones that most people don't know about is the shortage of licensed people. The Canadian government, the Real Estate Council specifically, has made it more and more as a regulatory in different provinces for the people that are rendering the service to be licensed. And that's an area that the industry struggled with in the last few years, and it's becoming more and more regulations coming in. This is really bodes well for a company like us, because we attract a lot of young, straight out of degrees and diplomas, young people that are looking to get into this space, but they don't know how to get trained. And due to our size and the fact that we use a lot of our technology, we're a very attractive place for them to come. A, and B, we have the ability, because of our ability to generate more revenue per community that we manage, is actually to pay more competitive wages, which is making us a great landing spot to attract that talent coming in. The way we solve these traditional problems is really by way of digitization. A lot of everything in the community gets digitized, the amenities, the bylaws, the history, the minutes, so on and so forth. We create quite a bit of engagement between us and the homeowners, between the condo corporation and the homeowners, voting, polling, AGMs, SGMs. A lot of the very boring affairs that occur in the community get simplified at the fingertips of people. We actually run a really interesting artificial intelligence benching mark tool that allows the community at all times to know how they're doing compared to other communities in their size. It's great to feel like your community is well managed, but is our building being managed better or worse? Are we spending as much money compared to buildings next to us? So we actually have the ability to help them benchmark that. And then we finally do the full solution. We don't just subtract bits and pieces and say our technology doesn't do that. We actually take a holistic approach to how these communities are managed. The way we make money is we actually generate majority of our revenue through what we call a recurring model, whereby we give and license our technology and our services in one flat rate, which is very unique for the industry, to this community. And we have a recurring revenue stream. On top of that, because we manage all the budgets and all the financial instruments, the rails essentially of every single person paying the rent and or paying their maintenance fees in the case of a condo corporation, because all the stuff runs on our rails. What we actually do is we have financial services and budgeting tools, so we actually charge for that. On top of that, there's transactional fees. Somebody wants to use their credit card for a payment, or a vendor wants to get paid earlier, so we actually have different levels of transaction fees that we can actually facilitate for our communities. And then finally, we have a tremendously untapped opportunity by way of knowing so much about the community and how it's being managed and its financial affairs. We can actually bring in some really, really interesting solutions that can actually either streamline the operations of the building or lower their cost. A good example would be there's a tremendously big ticking bomb, as you may know, in the insuring of the envelope of these big councils and these buildings across the country. We're working directly with insurance providers by bringing in technology like sub-metering technology, like ability to catch leaks before they actually become very costly for the building by way of tracing and water detection solutions. And by bringing this in, we actually lower the overhead cost, the premiums for these communities, and create a really much more sustainable model. We actually get compensated when we bring these solutions in. I was using that as an example, but there's other interesting solutions like LED conversions and newer smart building technology that can actually manage the consumption of the building. A lot of these things we can actually bring in, but on top of all that, because of the data we have per home, we have the amazing opportunity to curate actual living solutions to these homeowners. Every unit needs to be insured, not only just the building. And we know a lot of the data there, and we actually have direct integration with different insurance providers to give the homeowner multiple offers. We know that there's grocery delivery opportunities, pet insurance, and the ability for the homeowner to even find a good vendor to come in and do some changes or some plumbing and what have you. So we're really, because of the digital connectivity we have with the homeowners, we have an interesting portfolio of solutions that we're just embarking on delivering to them. Our M&A strategy is straightforward. There's more than 13,000 property management companies that are moms and pops in Canada and the US. We identify the size, the good size for us. They're all can be bought at a very specific market price, let's say between 0.8 to 1.2 times revenue. They're usually flatlined with a very specific, they're usually generating cash, but a very much a specific gross margin model, and they can't grow very big, and they can't improve their gross margins much, and they cannot unlock additional revenue streams. It's just a straight line business that we just usually come in. We actually unlock the value of that business by actually putting our technology into these communities, increase the retention rate, open up new doors because of our digital strategy to acquire more and more customers into that market. And then we unlock revenue streams based on the model that I shared with you. Like I said earlier, we made 5 acquisitions, all accretive to our bottom line, and we'll continue to do more and more. And that was one of the main reasons why we decided to go to the public markets. Here's what we've been doing most recently. In Q4, we raised $11.6 million. December 11th, we closed, and it was mostly institutional that are coming in to help us kind of create that flywheel model of M&A. And we announced that on December 11th. Q4 end of December 31st, we made a national acquisition of a company called Gateway, which operates right across the country, which is great because it allows us to get licensing and operations in the big markets. We had a quick, Israel's largest pension fund really was not around when we were doing the roadshow for the first qualified transactions. So they came in a non-broker transaction, $1.7 million additional. Really like those guys, and they're very strategic for us moving forward. And we announced that in February. We started trading on the 25th of March. So we just started, and now we're really head down, focused on executing on the business and acquiring and looking for further acquisitions to augment our service model. Value proposition, I think, is pretty straightforward. We changed the game for the people that live in the homes, whether they're tenants and homeowners, with a lot more visibility, a lot more understanding, a lot more accessibility and solutions for their daily living. For the councils that are in those big condo buildings, we changed the game as it pertains to visibility, education, as well as connectivity, digital connectivity between them and the homeowners. And the property managers, obviously, we changed the game because we attract young talent that's not burnt out, that's very paper-based. We give them mobility, we give them balance. Landlords, we increase the revenue per square foot because of the technology we have and unlocking new revenue streams. And for developers that are building these brand new communities, we have a suite of products that really change the way not only the buildings operate once they've completed them, but the way they even sell the buildings, because people more and more are looking for these condos to be a lot smarter, with a lot more ability to book amenities, book the bookable items into the building. With COVID, for example, it's quite a bit of need to actually have better visibility in what's going on in the building and the cases and so on and so forth. So we've seen a big take in the usability of our technology there. And then with trades, big change in the game for them, simply because of the big amount of communities that we manage. We can aggregate group buying power for them to bid on, for the trades to bid on, and get paid quicker, which is something that they really struggle with in the industry. This is a bit of an insight into all the revenue opportunities that we have from the home itself. And you'll see there, we've removed things that have nothing to do with the home. We just looked at things where the average household spends in there. And for each one of those categories, believe it or not, we either have a solution and or multiple companies that knock on our door daily to ask us to partner with us to take advantage of our group buying power that we can offer to the homeowners that we're with. Here's some examples across the country of communities we manage and some of the developers that we work with. Not to impress you, just to impress upon you a very specific point. We're not necessarily a model for the high-end communities. We actually support everything across the board. If it's $300-400 a square foot, all the way to $3,000 a square foot, these developers come to us and work with us. Efficiency, operational access, digitization is not something only exclusive to big communities or high-end communities. It's for everybody. At least that's our philosophy, and we've got the data to prove that. Very quick inside ball on how our operational model works. Cost per lead is $113. This would be for us to get a lead on a community that wants us to manage. And you'll see improvement pre-COVID, post-COVID. These numbers are from 2018, so it's a big size sample here. 44% since COVID hit, whereby we actually win the RFPs that we are in, meaning, and I want you to know that we're actually not the cheapest. We're never the cheapest into the RFP process. If anything, we're often the highest price, yet we still win 44%. It just shows you that we have a good understanding of price elasticity, plus there's quite a bit of hunger for a technology-based solution like ours to be married with the services. And you'll see our full cost per acquisition, including the onboarding and putting all of our digital technology into a community, is about $1,800. And to give you a perspective, lifetime value of a community that comes to us is in the neighborhood of $600,000, the lifetime value for us from a generating revenue point of view. We currently manage about 650, maybe $700 million annual money going through our rails on behalf of these communities. This includes rent and maintenance fees and money going into the hands of the caretakers of these communities. Yellow is where we are operating. Dark gray is where we have some aspiration and or areas of of targets. We want to also make the point, a takeaway from here, is that for us to win the space and be very, very, very successful, we don't need to be operating in every state or every province, not alone every city. As you'll see here, really density in the markets we're going after is really very specific. There's 1.6 million condos alone. Overwhelming majority of it is between, Montreal, Toronto, and Vancouver. So we're, where we have presence, and we're actually obviously just scratching the surface of 40,000 homes under management. Very quickly, shows you a little bit more of our revenue uptick since 2018. The key for you just to recognize here is fiscal year used to be April 30. We've just made a change with with our public markets transaction for this to be a calendar year. So April 30 would finish there. But with a calendar year of 2021, you'll see us doing somewhere in the neighborhood of about $60 million. Overwhelming majority of it is recurring revenue. The other interesting number I want to show you here is our monthly average revenue per customer. We call it a community. You'll see here that we've constantly, quarter over quarter, been able to move it up. And we just made a big acquisition that brings down our average customer revenue monthly customer revenue. And we know that this is not a surprise for us. Very traditional for us when we go in and buy a traditional property management company, that our average revenue per customer goes down. That's a traditional thing for the industry. Our number prior to making this acquisition is always higher, simply because we have a better operating model. So as you'll see here, we're very excited. We're going in knowing that our goal and our excitement is to get that number back up to where we're accustomed to having it. So this is something that's a metric that we keep a very close eye on. I'll pause here and let Jim walk you through our cap table. Jim?
Thanks. As Joseph mentioned, we just went public via reverse takeover of Michelle on this TSX venture. We rolled back the private company, but we did all our financings at a $5 reference price. So we have a very good cap table. We've got 15.9 million shares out basic, just over 1 million options and warrants, so 17.1 fully diluted. After financing the acquisition and tucking everything under and going public, we have 6 million of working capital. Our shareholder base is full of strategic investors, a number of developers that Joseph alluded to. About half our shares are held by a number of large developers that funded this company from inception. A quarter of the stock is held by directors and management, and then the public float and other investors are another quarter of the company. We just went public, so we're just getting up and running, getting trading, starting to get some volume going. We're presenting to new people and look forward to some of you becoming shareholders. Joseph?
Thank you, Jim. This is a snapshot of some of our executive management team. As you'll see there, quite a bit of expertise on the management side with historical stuff, top executives at First Service, at Gateway, which would have been the Ulrich family, which is one of Canada's most experienced families and companies in the institutional rental space, whereby we work directly with REITs and asset management groups. We've added some great talent. Maureen McMahon would be, that just recently added to our executive management team, is an ex-executive at Starbucks Canada that comes with a lot of expertise. At the end of the day, what we do is really very much affects people both within our organization and externally. So we take that very, very seriously. This is our board. You'll see here, unlike traditional property or private organizations, whereby the board is a representation of the stakeholders and the shareholders, what you've got here is actually quite a bit of independence and quite a bit of governance background. And that was done by design, because we not only have attracted great institutions, but we still further ahead want to be attracting further institutions, and we want to be indexed at a level whereby governance is actually a strength of ours as an organization. So to summarize, we are a one-stop shop, really focused on solving all that is property management related. These communities that you see around you, we have experiencing tremendous amount of growth, both using our technology and services, but also on the revenue side, a lot of M&A activities ahead of us, available to us because of the traditional lack of succession plans in this industry that we're servicing. But most importantly, once we're in and we get our hands on these communities, we can unlock additional revenue streams that weren't there before and bring in a lot of smart technology and operational efficiencies to these communities. Thank you.
Thank you, gentlemen. That was a great presentation. So we're going to take a Q&A now. I invite everyone to ask their questions in the Q&A box, but we already have a couple for you. So Keith had a couple of questions for you. One of them, and I know you touched on it a bit, but can you give examples of what incremental revenues you're generating now from your technology offering, and what kind of size revenue are we talking?
Yeah, so a good example currently would be insurance. One of the biggest problems in the community is condo insurance are actually underpenetrated. Most people don't know they need individual condo insurance. That market is either, depending on which studies you read, between 40 and 50% underserved in the Canadian condo market. We actually delivered that insurance offering to many of the brand new communities that we help with. The numbers are not very big as it pertains to the total amount of revenue that we generate from that. However, it's in the neighborhood of about $4 per door per month is on average what we end up generating, between $3 to $4 depending on the size of the community, on the home itself. And then another good example is a relationship we're cultivating that we're going to be bringing in with water detection and sub-metering, whereby the building can actually manage its own individual unit, can actually manage its own, and gets built specifically to its consumption from a water point of view. And that's an interesting model because that's a 5-year usually agreement, and the revenue there could be as little as as much as $3 per condo per month.
Per unit. Okay, and are you, again from Keith, are you almost turning yourself into a de facto general contractor for these buildings?
Actually, a great question. We don't do any of the service. We actually think of us, we're more likely becoming the de facto marketplace for these buildings. When we are done, meaning done being incredibly satisfied, and that's very difficult to do, but when we're done and feel incredibly satisfied, a lot of the communities we manage, it's that $600 million number I shared with you guys that gets spent in our communities annually, and that number grows every day. We want that to actually exist on a marketplace whereby we marry the right solution provider with the right community to deliver a great job for them and have a rating system. We'll never really own any service providers. We're never going to be a plumbing company. We could potentially own some really interesting technology for the community itself that I can see us making investments in, but not likely on the service side.
Now, speaking of technology, it did come up. Is Tribe, is it an app, or how does it use, let's say, practically at each property?
Yeah, no, it's a great question. So each individual building is actually digitized. What does that mean? We actually get the data of that community, get all the bylaws, all the amenities, the booking rules around the amenities, and it gets digitized. And then apps spawn out of that platform. So if you're a homeowner, you get an app, you log in, and you actually get to see things that homeowners need to see. But if you're a homeowner plus a council member, you actually download it and you get to see things that are a little bit more visible to that. And if you're a tenant, you don't get financial access, but you might just get your booking amenities opportunity and so on and so forth. So it's a platform with apps coming out depending on who you are and what your needs are.
And Tribe is developing those apps, like that's
Correct.
part of the package.
Everything is built by us. Correct.
Okay, perfect. Is there any age limitation to to a building before you can put it into your solution?
No, that's what we love about our solutions is it came out of solving, frankly, more problems for the older, more challenged communities. So we've got buildings that are 50 years old that are low rise, all wood and probably dealing with tremendously big projects. But we also have, big towers on the water and at $2,000-3,000 a square foot. So really, there's no limitation to which community we're best suited for.
Great. And so this is a question I also had myself that Kevin asked. So you mentioned Canada and the US, but is there a possibility for exposure in Europe and in Asia where there's a lot of these buildings?
That's a great question. The problem we're solving, absolutely 100%, is a global problem. And as us being Canadian, I will just let us celebrate for half a second the fact that, believe it or not, we're looked upon globally as the actual shining beacon of how to actually solve some of these city problems. It's hard to believe, but that's the reality of it. It's a very educated statement I'm making. And I can even tell you from a US point of view, a lot of big private equity, a lot of prop tech companies are actually looking at the model, both the governmental model and the operational model of how these communities are managed, both in Vancouver and Toronto. So while we all get angry and upset about property management and how the buildings are managed, we're actually doing way better than other parts of the world. So we do get inquiries from all over the world. We recognize the fact that our M&A strategy, as we get stronger, will allow us to land the plane, as we say, in these markets. But right now, we're just completely focused on making a dent into the numbers here in Canada and potentially in the US shortly.
Okay. So, which brings me to how many acquisitions, or is asking how many additional units you plan to add annually going forward?
We're active. We're active. We love the fact that since we've been public and frankly our model is a little bit more out there in terms of the fact that we're open for business. We've got quite a bit of interesting inbounds coming in. We're very selective in how we do this, simply because it's one thing to have a great operating company. It's another thing to really like the portfolio and know that we can make a big difference in its gross margin. So we're active, we're selective, and we'll hope to keep you guys apprised as we go along.
So then some financial questions. Maybe this is for Jim or both of you. So EBITDA margins.
Yeah, I'll take this, and Jim can backfill if needed. So all the businesses we look to acquire are actually EBITDA positive. So that's not to say we may look at a smart technology company that's early, that doesn't have revenue yet, but we think it can actually fit beautifully in our model. So that's possible, but the overwhelming majority of operating property management companies all the ones we've acquired and all the property management companies we look at are usually cash flow positive. I will say this: we have all the levers as an organization to be profitable. We choose not to be, simply because we're very much on the hunt to grow our footprint, because we think a land grab here is very important. Obviously, the public company, while we love being a public company and love the currency that's made available for us so we can make more acquisitions, is there, but it comes with expenses. So if you remove those expenses, we've got with ease levers to be profitable. We just choose to be on the acquisition side right now.
So then that brings me to this question. What quarter do you expect to be cash flow positive? Or that's something that you're putting off, as you mentioned, because you're in this heavy acquisition strategy right now?
Yeah, I mean, the majority of stuff we look at can really make a big dent into our quote unquote burn. Really, just the goal for us is to put our technology into these communities and unlock more revenue streams. That's these are the big metrics we're really focused on. Just the fact that as an entrepreneur, one of my absolute things I'm very thankful for is when you're operating a business where you have the levers, you can actually be profitable. If you need to play defense due to economic conditions or industry conditions, I will tell you this: our business is recession-proof, absolutely been proven that it's pandemic-proof. If anything, it accelerated the need for our services. So we feel really, really good about that. So we'll put our head down, focus on growth, but we're incredibly fiscally blessed and responsible.
Great. And so how long does it take to integrate an acquisition on average?
Yeah, that's a great question. So we're in the midst of our biggest acquisition to date, and to be realistic, I do think, so integrated obviously is a broad word. From a revenue point of view and putting our technology in, that's less than a quarter, but that doesn't necessarily solve the problem of, well, okay, how is your operation up in XYZ city completely remodeled into the model that we have at Tribe traditionally? That's likely going to be 2 quarters. We think maybe in a much larger scale acquisitions that are broad and operating in multiple offices, maybe 3 quarters. But really, to see the benefit both on the revenue side and the digital side, we actually get to see it pretty quickly in 1 quarter or less.
Okay. Is your plan still consider being the sales agents for units you manage when units are bought and sold?
Yeah, it's a it's a very thoughtful, interesting strategic question. Look, the licensing required in Canada and most of the US to sell condos, believe it or not, is almost identical, and it's by the same group as to manage a condo. Okay,
Oh.
so the quick, very insightful question that's been asked is asking, well, if you're doing that and you're managing these 40,000 plus homes, what are your ability to actually sell them? On paper, we can sell them. We just think we need to be in the right mindset with the right products to be able to close that transaction. I will just say, stay tuned in the next few quarters based on movements in that space, because we really like it. At this point, I will say nothing sells in these communities without our assistance. We're the company that has all the data. Click of a button, we produce all the documentation required for the seller to educate the buyer, for the buyer to get oriented for the seller and actually get all their data and actually take over digitally the condo as well as physically. So we play a major role in there, but we have an opportunity to play a bigger role.
And Joseph, when you say you have the data, so I'm guessing Tribe owns that data and based on everyone that you're renting from. Okay.
Correct. And just for the record, we have no interest, nor have we ever been asked to sell the data. We don't, that's not a part of what we do. The data's value is not to sell the data. The data's value is in the knowledge and curating solutions very specific to this data. If we know that out of our 40,000 homes, about 6,000 of them have pets that are dogs, we can actually deliver some really interesting offers there that can help those homeowners lower their insurance costs and or maybe food delivery costs, as an example, right?
Interesting. What percentage of revenue goals are multi-residence versus condo?
Very good question. So on the revenue line, we are closer to 60-40 in the gross line. However, rental properties are better margin. Condo properties are more sticky. So that's the biggest difference. So we like the condo space because we have a lot of relationships with the homeowners and they don't tend to leave as often as they obviously do in a rental community. However, the rental communities that we manage are more profitable as it pertains to our recurring fees. So we like both.
Okay. And the last question here from our audience, what percentage of the company does management own? I know you did touch on it. And who's the highest shareholder?
Jim, if you want to answer that question as it pertains to our shareholders.
Sure. Our management and directors own about 24% of the company. And our largest shareholder is the Aquilini Group, which is a large real estate developer based out of Vancouver. And I think they're 27.7% of the numbers.
Yeah. And they own the Canucks, so people from Toronto, don't hold that against us. We still love Toronto.
Montreal. We still love the Habs better.
And we're still the Habs. It's all sold out.
So Paul, do you want to ask a question or two, and then we can wrap it up with the gentleman?
Once you get into a complex, like a condominium, what's the term of what's the term length of the contract? Is it renewable annually, or do you take it for 5 years, or how do you work that?
No, great question. So it is an annual renewable agreement. Historically, guys, we've had less than 2% churn year over year. So think of all the growth we've experienced quarterly that I shared with you. We went from almost less than $3 million to $60 million of recurring revenue. Yet we churn less than 2% annually. Now, as we expand and make more acquisitions that are national, I can tell you when we buy these companies, they tend to be in the 10% churn, between 10 to 14% churn. That is the traditional churn rate in a traditional property management company. So this, the companies we buy might be a little bit better, but they'll be in that neighborhood. And our job is to actually turn them into our traditional 2% as an organization.
All right. One quick question. Your cash position right now, your burn rate, and how do you intend on financing future acquisitions? Do you have a line of credit with somebody, or?
So our cash position is $6 million of cash after we obviously the transaction cost, as well as paying for the national acquisition that we just announced. We're holding back a little bit on our burn rate. We'll wait till our financials come out. We feel very strongly about the health of the company. And to answer your question finally on on how we expect to finance. It's in a unique business in that we actually have senior debt available to us. So think of all you big banks across the country. Yep. They love our business, not because we're a tremendously large organization at $15-60 million of recurring. They love us because of the amount of money that goes through our rails. They love us because they also get trust accounts from us. So currently we work with TD, who's a big partner and big champion of ours. So we actually have access to, and I don't need to tell anybody here that cash has never been cheaper. So we have access to that type of senior debt. We've obviously been a public company with some great institutions behind us that have backed other M&A roll-up companies before, understand that that's going to be a currency that we're going to be leaning on, and we will be using some cash for some of the smaller acquisitions that we're by. It's a succession, like a succession plan. So,
well, very interesting company, very interesting.
Thank you.
I think you guys are going to do well. I mean, how is it? I mean, moving forward, like more acquisitions, just more revenue just keeps coming in, right?
Yeah, we like the arbitrage. We prop tech companies in our space with a lot less success as it pertains to the gross margin and, frankly, growth, or even identifying M&A space, are trading as little as 8 times revenue, as much as 20 times revenue, with very much no path to profitability. We really like the path we're on. We like our business. We like the stickiness of it. Plus, we like a lot of the cash that goes through our rails because of our ability to further guide these communities to spend that money wisely, because that's a big problem in the industry.
Yep, exactly. Well, Jim and Joseph, thank you so much for your time today. Much appreciated. Thanks to everyone who joined in. If you have any further questions, you can reach out to Sophie or I, and we can put you in touch with Joseph or Jim. Again, thanks so much, gentlemen. Much appreciated.
Thank you, guys. Enjoy your day. Stay safe.
Thank you.
Thanks everyone for their
Bye.
time.
Thank you.